Hello guys, good morning. Today we are going to be selecting one of the pairs we don't usually analyze, and we analyze it, maybe one of the one S pairs, and we see what possibly we can find out on that pair. And I get to drop you guys our analysis breakdown on that pair, so you guys can decide what you want to do with that information on your trades. So I want to set the timer. So I think I'll be setting the timer to 30 minutes. So we'll be having this analysis sessions for 30 minutes. Okay. So let's look at volatility 91S. Okay. It's relatively easy. This pair is relatively easy. So why do I say it's relatively easy? Now, the thing with this pair is this. We've looked at how price has been reacting right from the past, which is around 2024. So one thing we can say we've seen clearly, or we've seen that has happened multiple times, is we've seen price break structures to the downside. So I can't even mark all of them. I'll just mark a few. So what we are doing now is what is called top-down analysis. Now marking the major structures, even these are still structures. So let's just clone it. Let's clone this guy. So we'll clone it and let's see if we can mark everything so you guys can understand, because it's going to be like a lecture. Okay. So we'll clone this, we'll clone it again. I think that is okay. So now, one thing you can now see clearly is we have this area which is a good support. We have this area also which is a good support level. So now, these are also zones which we'll consider as break of structure. So this is a big one. This was a big break of structure. There's a smaller one here, but I don't want us to mark it. Now, the anticipation of people will be high that whenever price gets back to this point, a lot of people will be looking to take sales, which is very true, and it's what it is. So whenever price comes back to the upside here, a lot of people will be looking to take sales, which is fine. Now, another thing again we can easily see is let me just continue with this. So we had break of structure, which is from this point. We have level 1 break, level 2 break of structure, and all these levels. So all this break of structure simply tells us one thing, that what price is on a downtrend. Now we also had something here. So we still had what we'll consider break of structures to the upside. So let's still mark that out, and so you guys can understand everything perfectly, or how we go about our analysis perfectly. Alright, very good. So we have all these areas for our break of structure to the upside, and we have this point. So there's no other break of structure. We'll delete this. So what you can clearly see now, guys, is you can see that price has break of structure here, break of structure here, break of structure, all this. So all the way to this downside, we had what we call a downtrend. And even from here also, which was from this low, we began to have break of structures to the upside, which is like an interim uptrend, and then we had a drop again to this current price point. All this is a very good information, because it helps us to understand what we can be anticipating for. It gives us a clear direction of price. You understand? We can call it market price, we can call it price. Now, overall, when you come to this chart, one thing you can easily see is you can clearly see that this market is on a downtrend. Now, how is it on a downtrend? You can see all the highs and lower highs, lower highs. This is also a lower high because it's lower than this. Now what can we simply do? One thing we can easily do to just help us with our analysis is we can simply mark out this high and we attach it to this one. This marking out this high basically is just telling you, helping you understand how to plot your zone, like also understand the wave of the trend. So we simply mark our zone out from this point to this point. Now there are two ways to go about this. If you want to mark it just touching the wicks, or you want to mark it touching the body. If you want to mark it touching the body, then you find out that you have to adjust it. I always like marking it using the body, but this is a higher time frame. We don't really need this. We just can see it already with our eyes. So but let's just do that for the sake of perfection. So we've marked our zone, this low with this, which is the lowest point that aligns with this line. We have this with this, which is the highest point that align with our line. So that being the case, we now understand that price is in a downward wave. Now with this downward wave, I already have it programmed in my mind that price will get to touch this line sometime in the future. You get. So but what will I do? Now one thing I'll easily do is this. I would easily come down saying that, okay, while my question will be, why did the market drop from this point to the downside, at least to this point? That would be my first question. And now to answer this question, I already have this zone to look at. I can see that this zone is aligning with this area, and we can see that we had a break of structure here. We also had a break of structure here. So one thing I can easily do, I'll just use a line graph. So if I should plot my line graph here in alignment with the break of structure we had there, you will see one thing. And what can you see? You can see that we had price break this structure here, drop to the downside, and it came back up to respect this zone. And you can see that all the while where price was respecting this point, it would push up, drop, push up, drop, push up. So it simply tells us one thing, that this area is a very strong resistance zone, because you can see price tested it how many times? 1, 2, 3, 4, 5, and 6. That is, price tested this level 6 times. That is a lot of tests. So now, the people who had this information on ground, they already knew that whenever price gets here, it's a strong resistance point, they will take sales. Whenever price gets here, it's a strong resistance point, they will take sales. Now, some other persons will want to go a little bit deeper or stiffer, anyhow you want to call it, and they will mark out this particular area. So whenever price gets into this particular order block, you get, this is also another block which created the drop. Whenever price gets into this particular order block, they'll be looking to launch in their sales. You get, whenever price gets here, they'll look to launch in their sales. But bear in mind, the major reason is price got into this mitigation level. It might not get into the other block sometimes. So just know, once it gets into the mitigation level, you begin to look for your angles. Now, we've gotten that piece of information sorted with or done with. Now, this is on higher time frame, so it's like you marking what we'll consider or what we'll classify as a zone. You understand? It's like you marking what we'll classify as a zone. So now, before we can now go to the 4 hours time frame. Now, if we put our line graph, we can still draw our trend line from this zone, aligning it. So let me do that so that you guys can still pick that. So now when we plot our trend line, this is how we plot our trend line. We plot our trend line from this low to the higher low, and we align it to make sure it laps. It is like in line. Now we don't want any of this line to protrude or go below our trend line, so that will help us adjust it. But when you draw this trend line, you just have to understand and watch if price bounces on your trend line, then you have to adjust it to that bounce. You understand? If it doesn't bounce, if it breaks like this, then you know that is a break. You just leave your trend line on at the point where you adjusted it or where it is. So this is where we will correct our, that is the reason why we corrected our trend. We will be correcting our trend line and putting it at this particular point. Now, that being the case, one thing I clearly understand is this point is going to be our point for take profit with this trend line that we plotted. So this point is going to be our point for take profit. Though we would adjust it when we come to 4 hours time frame. We would adjust it. But then let's now come down to the 4 hours time frame. Now, on the 4 hours time frame, one thing you can clearly see, I think, let's see where the line is, if it's still in line. So you can see on 4 hours time frame, it's still in line at this low. Very good. This is a very good one. But now, something that you can see also that is not in line is this is breaking below. We don't want anything to be below our trend line. We want our trend line to align perfectly with the lows basically. We don't want any low to be below our trend line. If not, it doesn't give us the particular kind of information we want from our trend line. So what will I do now? I would simply adjust my trend line to this point. So if I were to take any trade from all of these angles, this test and everything, I would simply do what? I would simply plot my trend line from this point, aligning it with the next higher low, which is this higher low. So I'll simply plot my trend line from this low, aligning it with the next higher low, and then we watch how price reacts. This is another good point, and so on. So now, this being the case, that is done with. You get? This being the case, that is done with. Now, having this information, you can clearly see whenever price, you can see here, price broke clearly here. We can go to this place so you can see. So you can see at this point, price broke clearly here. We will now use our confirmation patterns to take an entry upon this retracement. You understand? And in alignment with other things which price reacted with here, which we would explain on the smaller time frame. You get? So now we already have this piece of information here, and then we say, okay, now how would you be able to catch up of these cells? That is very good. Now we already see our line here. Fine. Now, the only point, any cell that I'm catching from these areas here are going to be risky cells. Like from when it got into this point and I didn't get any trend line break from this second one. I don't like drawing any other third one. I only draw 2, 1 and 2. Now, once price has not closed below my trend line, sorry guys. So once price has not closed below my trend line, I avoid taking entries. So, but once it's closed below my trend line, all these zones I can catch off these trades because it is below my trend line. You get the point. So now, this is when we'll be taking our first entry. Price goes below our trend line with all these bearish candlesticks. It's quite alright. That's fine. Now we understand this is a resistance point. This is a resistance point now, which we can extend. Now this has not happened, but let's just extend it across. So this is a resistance point which we already would know because I've seen price respect it multiple times. And once you get multiple touches, like 3 touches, you should be rest assured that price should drop. You understand? It could still go back there and all of that, but you should be rest assured it will drop. So now, that being the case, one thing we would now do is all these highs are what we will now mark out. But now I'll have to delete it and use the new markup for it. So now, what do we do? I'll be using this line. I'll be marking out all these points. Now, when we mark out these points, there's something we want to see. When we mark out these points, there's something we want to see. We want to see price come into any of these levels, respect it, and go back up. You understand? So now, one thing again, you can see the other levels again. So the other levels, let's add it. The other levels, this one is one, this is another, this is another. So they are just other levels. You just have to mark them out. So this is one, this is another one. I don't want the chart to be too messy because, yeah, so I won't want to mark other ones below. So let's just mark these ones. So now, one thing you can easily see is, you can see that when price broke our trend line, it came into this zone, respected this our resistance point, and retraced. We call it retrace. It pushed back to the upside. Now, when it pushed back to the upside, what are we looking out for? We clearly see that we have to now react with this particular push up, that is this particular resistance point, to take our entry. Now, the first thing by default, I'll be marking. So I want to remove this line. Or I'll change the color to something like white, so it doesn't disturb us. So now the first thing I'll be marking is this. I think this white is disrupting our view. Let's see ash. Okay, ash is a little bit okay. So now, after finding out this particular retracement we find here, you get. So after finding out this particular retracement here, you get, we now have to do what? Mark our resistance points, which will give us our confirmation from this point. Now, one thing we always look out for is, we look out for other resistance points, which is this one. We look out for other resistance points, which are these. You get. So when we look out for these resistance points, we want to see price react from those resistance points in alignment with other things, which is price reacting with what we call our mitigation zone or our order block level. You understand? So we want to see price also reacting with our mitigation zone or our order block level. So now let me show you what I mean by that. Now, we've added other resistance points which we'll be looking out for. So now we have price reacting from this point. It's pushed to the upside. Now what are we seeing? There are other resistance zones here in this push up to the upside. Now we don't want to make use of that. Not that we can't mark it out. We can mark it out, but I don't want the chart to be so messy that you will not understand what we are doing anymore. So let's work with what you have already. So we've marked out other resistance points. One thing you easily see is you have to see price. Price retraces. You can see that there is a kind of cluster. I'll call it a cluster here, which is something that happened before price dropped to the downside. It's like indecision in the market before price dropped to the downside and gave this bounce from here. So what do? We'll be marking this particular, and you can call it a break of structure. So we'll be marking out this particular zone, which whether you call an indecision and all of that. So why do we mark this out? We mark this out for something. We simply mark this out as an indication stating that whenever price gets into the zone, we begin to look for our entries. But now, do you enter the market blindly? No. You cannot enter the market based on either you want to pick your trend line confirmation, because now this is 4 hours time frame. You want to pick your entry based on trend line confirmation. You understand? Or you want to pick your entry based on rejections. You get. So there are different methods to pick your entry. Now, from this mitigation, once it gets into this mitigation, one thing we begin to look out for is we begin to look out for entries. Now, when you see this point, these resistance points here and here, there are two significant levels which we can see. Price tried getting into this point and rejected. It didn't reject fully, it didn't drop fully, and it tried pushing back up into these zones again before making its major move to the downside. Now, if you come to this point, there is also a trend line you can plot. You get. There's also a trend line you can plot, which is this one, and when you add the second trend line, it will carry you in like this. So you can see that when it comes to breakdown trend, when it comes to market breakdown, you just have to be going through things little by little, little by little, little by little, to gather information and get out things from the market. Now, if you don't even understand trading, all of this I'm doing will just be so confusing. You can message me, we'll go about how to go about it. Now, based on the fact it has respected, we look at this zone, it respects this zone, and then we can take our entries from those points. So now, this is a point you would have taken entries from, and you would actually hit stop loss from this first entry, and then when it's retraced into the upside, you can see it respected the order block, respected everything. First mitigation, second order block, and also our level of resistance point, and then gave us our bearish engulfing candlestick. Now, our bearish engulfing candlestick came from here first, not this. It came from here first, and when we take our entry, we put our stop loss at this resistance point, and we allow the trade to run. It still came back, tested just a retracement, and then it dropped massively. Now even from this drop, I think let's see what happened. It dropped massively, and all it's been doing at this point was when it drops, respect our resistance points, pushes back up, comes back, respect our resistance points, pushes back up, and then it finally did its major drop. So now one thing you can now see how price reacted from this point, and how I gave just one example on how we would have entered. Now there are multiple ways we would have entered. Even when you see price rejecting from this our level, which you see this line, you would know already that it's a rejection. You cannot have to, there are certain things we will do to find an entry at this area. So that is that for that. Now let's come down to, I already have a lot of markup, I want to reduce them. So let's reduce this markup so you guys don't get confused about certain things. So, but the markups are important. So I'll just adjust this, then we'll reduce this, remove this. So now with this information, okay, good, we'll put this back to the original color, blue. So with this information, basically you find out that price reacted to different zones. It's just kept respecting the zones up until it made this major drop. Now what are we going to be looking out for at this particular point? Now we've had our resistance point, which price respected well here, which is this point. You can see it came here, respected the resistance point, and also respected our mitigation clearly, which was a very good thing. And now we can see that price is currently retracing. It respected our mitigation point here in alignment with our zone. So everything tallied very well at this point. Everything tallied very well at this point. So, and then it gave a very wonderful drop. Now this was a first take profit, you understand, based on this zone on the smaller time frame. But now this is not the major take profit. So if you are trading with the higher time frame, this would be your final take profit. So now what would you make of this particular happening here? What will you make up of this particular happening here? You can now find out that this is still a running sell if you entered from here and you're anticipating to hit this point. So all you can now do is to go to the smaller time frame and look for an entry. Understand? You can now go to the smaller time frame and look for an entry. So this is what I will consider a retracement, and we already had our break of structure. We consider that as our retracement. So when we go to the smaller time frame, let's see what we can say it's happening. Okay, so one thing I would easily say here is I can see this point here. It's a retracement, it's a zone, it's a significant level. This point, there's another block here, and here is also a significant level price has respected. So let's see if this price can reject into this point. Let's see what will happen here. Let's see if it can reject into this point and give us a bearish engulfing candlestick to the downside, then that is an opportunity to continue riding this trade to the downside. And if it doesn't do that, if it goes a little bit above, then this is the next level we can look at. Now this mitigation is in alignment with another confirmation, which is this resistance point. So you'll be seeing price coming into this place or tapping this place and then going to the downside. Now this is the final take profit. So you can see that this is a very clear setup, and it's a very clear opportunity. Now having picked all this information, let's go to the higher time frame. Now on the higher time frame, you can see we marked this point. Okay, you can see we marked this high. Another resistance point you easily see is this one here. So when we mark this resistance point, this will help you understand where price could possibly retrace to. So you can see maybe price could possibly retrace to this place. There's a meaning there. And where is it retracing from currently? This zone. Let's go to 4 hours time frame. So where is it retracing from currently? This zone. Where could it possibly retrace to? This zone. You get the point. So it's currently retracing from this zone and could possibly retrace into this zone, which aligns with this mitigation here. So that is in worst case scenario, but then let's see how price does its thing. So what we clearly understand is that we are waiting for what? We are waiting for a retracement into where? Into either this point or this point. Now when we get a retracement into this point, that is a very, very wonderful one for us, because it's going to give us more confirmation that okay, that the sell is going to hold and hold well. But if it does retrace into this place and give us a bearish, that is just like a little bit risky trade. You understand? You can just take a risk on that. But when it gets into this point, you are rest assured that you are going to be getting a good trade. So that's it, guys. I'll call it a day. I think we've spent about 25 minutes on this one. I hope you're able to pick one or two from the trade analysis, and I hope it helps you in getting your analysis better. So do have a wonderful day, guys, and peace. We're looking for sales on volatility, 91s. So we're looking for sell opportunity on volatility 91s, and I hope you all make money from that particular trade. Peace, guys.